Investors shift their focus to the European Central Bank ECB meeting on Thursday amidst a brewing banking crisis. Now, the questions doing the rounds now. Will the ECB hike by 50 basis points? Will the ECB ease the pace of its rate hike and raise rates by 25 basis points? What will the ECB's tone and stance be? Do bailouts make things better? There are a lot of questions. Now, earlier this week, a jumbo-sized ECB rate hike were baked into predictions. But those bets have quickly evaporated, with growing concerns about the health of Europe's banking sector. Traders' expectations for a 50 basis points hike have now fallen below 20%. The troubled Credit Suisse emerged as the biggest fallout from the collapse of 3 US banks. Now, last week in the US, Silvergate Bank shut shop, followed by a collapse of the Silicon Valley Bank and then the Signature Bank. 2 days later, the abrupt closure of those US banks is touted as the trouble of the 3 S's. That sparked fears of a broader global banking crisis and led financial markets on a roller coaster ride thereafter. After the collapse of those US banks, global financial stocks lost $465 billion in under 2 trading sessions. While a mini recovery was in play late on Tuesday, news emerged of troubles at Credit Suisse. The focus of investors and regulators then shifted to Europe from the United States. Despite the Swiss National Bank stepping in to infuse $54 billion into troubled Credit Suisse, there was no respite in the financial markets meltdown. Indeed, while the Swiss Central Bank tried to shore up investor confidence, the market rout continued, with Asian markets flashing red on Thursday. Credit Suisse has been struggling for survival for a while now. And for now, there seems to be no relief for Switzerland's second largest lender. That's because its largest investor, the Saudi National Bank, has ruled out any further financial assistance to the 167-year-old Swiss bank. Shares of Credit Suisse plunged nearly a third on Wednesday, hitting a new record low. That came after the bank's largest investor, the Saudi National Bank, said it could not provide more financial assistance due to regulatory issues. The Saudi lender had acquired a stake of almost 10% last year after participating in Credit Suisse capital raising. The Saudi bank back then had also committed to investing up to $1.5 billion. However, Saudi National Bank chairman Amar Al-Khudairi said the bank cannot provide additional funding as it would go above the 10% regulatory threshold. The drop in Credit Suisse shares weighed on broader equity markets. Some investors are worried about the global banking system's resilience. For now, investor focus will be on any action by central banks and other regulators elsewhere to restore confidence in the global banking system. Investors will also assess any exposure businesses may have to Credit Suisse and other contagion risks. Sentiment remains fragile and a nervous air hangs over investors as markets remain on edge ahead of the ECB meeting. For more on this, we were earlier joined by Daniel Lacalle from Madrid. He is a chief economist at Tressis and author.
Very probably what the ECB is likely to do is to maintain rates where they are, wait and see to at least monitor whether the stability in the financial sector remains, and at least give some confidence about the level of liquidity that banks will have from the ECB. We have to remember that the ECB continues to have the TLTRO, the Targeted Liquidity Facility, and therefore it can provide ample liquidity to the European banks. So I think that it will hold rates and strengthen the TLTRO mechanism. Well, in my opinion, if the ECB decides to stop the rate hikes, it would be a mistake, because it would be showing the world that the strength of the financial sector is very weak. That it needs rate hikes. I think that it's very likely that it will maybe increase rates by a slower proportion and monitor the situation. But I don't think that it's going to completely revert the path of rate hikes. I think that the most clear impact is that what central banks, the Federal Reserve first, the Swiss National Bank now, and the ECB are going to do is to provide stability and to provide confidence that this is not going to be a contagion effect that will create a financial crisis. I think that basically the message that is unequivocal from central banks these days is that they will provide all of the liquidity that these banks require and that depositors are not at risk. So the most important message for the world is that there is a concerted and unequivocal effort from central banks to avoid a financial crisis.